Vibhav Kapoor, Group CFO with ALNFS, joins us live now. Vibhav, good morning. Thank you for joining us. Vibhav, these are clearly dark days for Indian markets. We can blame it on rupee, we can blame it on growth prospects or global liquidity. The bottom line here is that it's been a one-way street for Indian equities.
Yeah, indeed, they are dark days. And I think they've been building up for a pretty long time in one sense, because we've had so much of bad news, both domestically and fears on the international front now for several months and maybe a year or more. So what's happening right now is probably just the sort of accumulation of all that has happened over the last 1.5 years.
Vibhav, in the near term though, if we were to crack below the 5,500 mark, which we've been defending pretty much up until now, how much more capitulation could it lead to because of such an important level being broken?
It's difficult to really judge what levels the markets can go down to, because there is still a lot of uncertainties, both on the domestic front as well as on the international front. I think one big problem or one big factor which we don't know about is really on the international side, and that is when Ben Bernanke actually starts to reduce his QE3. What sort of impact it has on emerging market equities. Because I think it's not, of course, India is doing badly, there's no doubt about that, it has its own problems. But I think as a class, emerging market equities, after a long run of 10 years, are not losing attractiveness, relevant or rather in relation to developed market equities. And that's something which can have very major ramifications over the next 6 to 9 months. So we'll really need to see that. But there can be still significant downside.
Vibhav, whereas the index may have not fallen a whole lot, but mid and small cap stocks have fallen a lot. Just about everything in the infrastructure space is broken down. PSU banks are trading below their book. Key capital goods stocks are now trading at single-digit P multiples. Do you think it's too late to get bearish now?
Not necessarily. I mean, it depends on what you mean by bearish. If you're saying sell short, maybe it's too late and you need to wait for rallies. But if you are saying, is it the right time to buy? Probably not. Yes, in the long term, you'll find that, some of these stocks are cheap right now, and, if you were to buy them maybe 2 years, 3 years down the line, they may really give you good returns. But the question is, how far can they go down, and are these valuations which are looking cheap today, are they really cheap? Because we don't know what sort of earnings are going to come through over the next 6 to 12 months, 18 months. And if you really look at the earnings part of it, every year analysts have started with estimates of 13-14% growth. But if you look at the CAGR of earnings growth for the last 5 years, it's only 7%. And in the current year itself, about 6 months ago, people were looking at 13-14% for FY14. That estimate is already down to 6, 7 or 8%, and there's no saying that it cannot go down further. So what looks cheap may not really be cheap.
I mean, we've been seeing this dichotomy in the market where banks, infrastructure, real estate, cap goods, you name it, it is all getting beaten down. And at the same time, you have a handful of IT names as well as pharma and select FMCG, which has been, sitting at 52-week highs. With the market now correcting and correcting with such, velocity, do you think that these sectors which have been holding up until now as well will fall in line with the rest of the market, or will this outperformance continue?
Well, there are 3, I'd say, or 4 such sectors. FMCG, telecom to some extent, IT and pharma. Now 2 of these, that's pharma and IT, have been going up largely because they are immune to the Indian economy, and also because they gain by a rupee depreciation. Whereas the other 2 telecom and FMCG are not so immune to the Indian economy, but they've been doing well because that segment of the economy has not yet got impacted. So I think the first segment which will get impacted if things continue to worsen would be FMCG, where the valuations are very high. And I don't see any reason why consumption in the country will continue to gain at the pace it has been if there is no investment demand and the economy continues to slow down very significantly. Telecom, of course, reasons are different. It's coming out through a bad patch and probably can continue to perform reasonably well over the next few years. And the IT and pharma sectors are going to do well because the US economy is doing better and the rupee is continuing to depreciate. But I think at some point valuations, particularly in the IT sector, will put a sort of cap on how far these stocks can go, and you could see some decent corrections happening, although I think that would be a good time to get into these stocks if you get a 10-15% correction. Of course, in IT we also have this immigration bill in the US which could be an overhang and which would need to be watched carefully.
Vibhav, along with PSU banks, in the month of July and August, private banks also have taken a whack. IndusInd Bank is down 20% plus. Yes Bank has taken a hit of about 40%. ICICI Bank is down 17-18%. You think markets are slightly harsher in the way they've punished private banks? Because historically we've seen that in tough economic conditions, private banks, they've managed to really, buck the trend.
The smaller banks, yeah, I would agree with you. Probably the market has been too harsh on them. And you could get some good bounce backs at some point of time. The larger banks, I'm not so sure because, the valuations anyway are pretty high there. And, a lot of these banks are also in the retail market, the retail segment, which could get impacted later on. And in any case, I think if the economy continues to be in doldrums, you would see some sort of a slowdown happening in the private sector banks also. So there I'm not really sure whether this fall is unwarranted, but in the smaller banks I would tend to agree with you, yes.
Do you think the pharma space is also now getting slightly divided? One end of the spectrum you have a Sun Pharma and a Dr. Reddy, and on the other end of the spectrum you have Ranbaxy and Wockhardt. Until now, everyone was buying pharma stocks because they are largely global companies. They have a global exposure. But now, do you think it is time to be selective and a bit choosy when it comes to the pharma space as well?
Two issues there. One is that, companies like Ranbaxy and Wockhardt have had their own individual problems. And, we are well aware of those problems. So that's why those stocks have got hit. But the sector as a whole is still doing pretty well. But again, you can divide that into two. There are companies which have more of domestic business and there are companies which have more of international business. So the companies which have a higher degree of international business obviously tend to gain with the rupee depreciation and the fact that the US economy is doing better. So these companies should continue to do well. But on the domestic side, of course, we've had this DPC order where a lot of new drugs have been brought into price control, and that we've seen, even in a case of Dr. Reddy, for example, has hit them on the domestic side of their business.
Vibhav, what's the word on the street now with Raghuram Rajan coming to the helm of the central bank? Does it seem like he may have the magic wand which is needed to drive the markets, which the erstwhile governor could not really do?
Well, as he himself has said yesterday, there is no magic wand. And the economy is in a tough situation. We have to, I think, realize that. And I think he understands it far better than any of us does. This is going to be a long haul. And the RBI itself, by itself, has limited capability of, doing things. There are a lot of things, or many more things, which have to be done by the government. There are things which are dependent on the international situation. So I don't think, while of course it seems to be the right choice and he has, the full credentials, let's see how much difference it will make.
Vibhav, what is the future of JP Associates, Suzlon, GMR, GVK, Lanco, essentially companies which have a high level of debt?
Yeah, I think the companies which have been suffering most or which have been hit the hardest in the market are companies which are highly leveraged, and particularly if they belong to the infrastructure or the capital goods sector where growth has also been very slow. So these companies are going to find it difficult, but the ones you mentioned. I think they have some options. They need to deleverage either by selling their assets. Raising of equity obviously at this point of time is extremely difficult with the prices being what they are. So they are going to have to go through a huge restructuring. They'll probably need to really cut down on their growth. They will need to actually reduce the size of their balance sheet, and they'll have to go through a very, very long haul.
Vibhav, really good chatting with you. Appreciate you taking the time out and speaking with us.